Welcome back to Live from Paris. Time to get a business update with Owen. Owen, we're going to start with a look at the markets. We've got some flat trading to start the day here in Europe after a day to forget in Asia.
Yeah, marginally up, Claire, but nothing really to write home about. Of course, lots of pessimism infected the markets in the last 24 hours about really whether Europe is serious about this so-called fiscal compact, this idea of getting just a little bit closer together in terms of budgets. Let's take a look at the numbers for you at the opening bell. Pretty flat. Most of the European markets just up by around 0.2%. The FTSE MIB down at the bottom there in Milan having a slightly better start to the day, around 0.5% up. Lots of speculation, as always, that the ECB has stepped in to throw a lifeline around Italy, buying up some of its bonds. We'll get into the Italian story in just a little while. The Asian markets, as well, as Claire says, a day to forget there for most investors, particularly in Japan and Hong Kong. The Nikkei off by around 1.2% at the close of play. The Hang Seng has closed just a short while ago and again managed to recoup some of its losses, but not many. Still down around 1%.
Now, once again, that lack of confidence put the stress back in some of the Eurozone's most vulnerable economies. Both Spain and Italy have suffered a rise in borrowing costs, but France is also now feeling the strain. Two top credit rating agencies are warning its golden AAA rating is no longer guaranteed. And for the first time, President Sarkozy appears to have conceded this possibility, as Siobhan Silk reports.
The French government was dismissive that the country could lose its treasured AAA credit rating, but now that the prospect seems more likely, the tone has changed. President Nicolas Sarkozy told French daily Le Monde it would be one more difficulty, but not an insurmountable one, and that the country would face a downgrade calmly. Investors remain nervous. A market bounce after the EU's fiscal harmony deal on Friday has been quickly reversed by that downgrade threat. On Tuesday, Asian markets opened down on the news. Investors seem to be giving more sway to the ratings agency's analyses than to EU efforts to curb the debt crisis.
They are just trying to delay the crisis in Europe, so that really does not give any confidence to the market. And investors sold out, and you see the stock markets in Europe and America falling sharply overnight, and it carried over to Asia today.
But ratings agencies are threatening downgrades across the EU, and in the end it's the very breadth of the threat that could help soften the blow. Even if the AAA rating becomes a thing of the past, investors will still be looking for a home for their funds in Europe. And the EU can take comfort that Standard & Poor's downgrade of the US in the summer was far from catastrophic. It confounded expectations by driving borrowing costs down.
And as we heard there, the US, of course, unexpectedly saw its borrowing costs actually drop counter to most expectations when it was downgraded. So it does leave that comparison. Could France be like the US if it gets downgraded? My feeling is not really. When we talk about safe havens right now, where investors can dump their money in times of stress, Germany, yes. The UK, yes. The US, of course, it trades the dollar. It's the world's #1 currency. France, not so much anymore. Most investors just look at France and think it's overstretched right now. Remember, France, along with Germany, is backstopping the rest of Europe right now. So it's got huge liabilities on its books potentially, particularly pressing ahead with this bailout of the rest of Europe. And when you look at countries like Italy, France really is piggybacking countries like Italy right now. So it's difficult to see how the French can suggest that maybe it won't be so bad for France. The only saving grace they've got, if the rest of the European countries are downgraded, that it sort of levels the playing fields for France as well. So difficult one to call, but I don't think France is by any means a safe haven right now.
OK, now one country that understands the impact of a credit downgrade is Italy. Its new government is quickly bringing in some severe cutbacks in one of the world's most indebted countries. But as our correspondent Seema Gupta told us, Italy's borrowing costs remain too high to be sustainable.
If you look at the yields on the 10-year bonds in particular, I mean, they've gone back up again on Monday, even closer to that 7% mark that analysts say make borrowing costs unsustainable. And this despite the ECB intervention to buy some bonds, as has been reported. Now, the markets don't appear to be assured by that EU summit last week. If you saw the bond yields just in the lead up to that summit, they had dropped, but again, they've come back up again. They don't believe that the Eurozone countries have come up with a long-term solution, if any, to the Eurozone debt crisis. And if you look at what the Moody's ratings agency said yesterday, that few new measures have come out of that summit. On top of that, as you mentioned, the demand on the sale for one-year bonds, though, was there. And that's because the government had a sort of a BOT day, they called it, in which the banks dropped the commission on the sale of those bonds. So they managed to reach 7 billion euros worth of sales on that one-year bond. But we'll have to see what happens in another auction set on Wednesday for the 5-year bonds. There perhaps could be more challenges ahead in that one.
Our correspondent Seema Gupta reporting from Rome for us a little earlier. Let's take a look at a few more of the day's headlines for you now. The Dutch financial regulator has suspended trading in Saab's parent company. The halt was called when shares in Swedish Automobile, that's the new name for Spyker, which bought Saab a little earlier this year, sank 20% on Monday trading. Saab is currently in administration and is trying to take itself out of bankruptcy protection while discussing a potential €100 million buyout with 2 Chinese firms.
The fate of AT&T's takeover of T-Mobile's US operation has been put into the hands of a judge. The $39 billion deal, the biggest proposed buyout of the year, has been delayed by an antitrust challenge launched by the government. AT&T has until the 12th of January to tell the court overseeing the deal whether or not it intends to push for a full takeover or modify its bid.
And a new battle for the skies is brewing between Virgin and Lufthansa. Virgin Atlantic says it's negotiating with its German rival to take struggling budget carrier BMI off its hands. British Airways and Iberia parent company IAG is also vying for BMI, which lost more than €150 million in the first 9 months of the year. It's understood Virgin is offering around €50 million. That's around half of IAG's reported offer.
And before we go, something that you might find a little bit mean, ditching the Christmas lights. But one Spanish village has a good reason for doing that, Owen.
Is it the spirit of Scrooge flying through the Spanish village of Durcal? This is in the Granada region. There's a good reason for this, though. The town council has decided to ditch the traditional Christmas lights this year. The money they will save means that they can employ people like that you see there working for the council. That will sustain employment for around 20 people in this village. At least during the Christmas period, they'll be working for the local council. The mayor is getting into the swing of things as well. He's taken a pay cut, so have some of the councillors. This is all to try and save money. This village is not the only one in financial trouble. There are town councils up and down Spain that are basically bankrupt right now, partly because they overstretched themselves with some bad loans during the boom years in Spain, investing in all sorts of things that went wrong, namely property as well. So they are now very much feeling the pinch in 2011. All of this, of course, in a climate where Spain is really just hiding behind Italy in many ways in terms of its borrowing costs. It is very much on the radar. Borrowing costs in Spain are unsustainable levels, and possibly to make matters worse, we had Moody's as well putting 8 banks on downgrade watch, credit downgrade watch. That's 8 of Spain's biggest banks. I said France there, Freudian slip, of course. Maybe the French banks will be next.
Maybe they will be ditching the Christmas lights, but for a very good reason. I have noticed that we're seeing fewer and fewer lights here in France as well. So
I think, cancel Christmas everywhere.
Yes, right. Thanks very much for that look at the day's business news, Owen. That's it from me. Of course, just a quick reminder, though, you can follow Owen on Twitter, so do sign up for that.
At Owen France 24, in case you can't see it.
There we go. There's the address for you now. Do stay tuned to France 24. Plenty more news coming up. The latest headlines with Stuart Norval in a couple of minutes.